Welcome, all of you, to the Startup Impact Summit, the venture stage. In this section, we are going to have a panel discussion of impact and entrepreneurship in a world of change. We are incredibly happy to have Amra, Lwazi, and Vivan as our speaker, and the panel will be moderated by Catherine today. Without further ado, please join me in welcoming the panelists.
Hello, everyone. This is Catherine Chen speaking here. I am from AvantFaire Investment Management. AvantFaire Investment Management is a company located in Hong Kong, and we are doing specifically on impact investing. We do impact investing only, while we also invest into other funds. So we have fund of funds, as well as we advise our clients to invest into green bonds and other financial products. So I'd like to also bring out all of our speakers today. They're an amazing group of people. So let's welcome them on stage. And I'd like to ask Lwazi, could you please introduce yourself first and then tell us a little bit more of your work?
Great. Thank you so much, Catherine and Joe and the team for having me. Really excited to be here. As shared, my name's Lwazi Wali. I'm coming in directly from South Africa, out of the African continent, so really excited to be here. I'm wearing two hats. So the first is head of venture sourcing for a corporate-backed venture development company called Founders Factory Africa. We are located in South Africa, but a Pan-African facing fund. We are corporate-backed and led by two of the leading investments corporates in South Africa, the first being Standard Bank and the second Netcare. We have two sides to our model. We basically build and scale startups across the continent. On the one side, we build startups from the ground up. On the other end, we scale early stage, high potential tech startups across the continent. And we're on a very bold mission to build and scale about 140 tech startups across the continent over the next 5 years. I'm also founder of a digital tech startup called HQ, which is basically a social capital market for Pan-African women of color on the continent. Really exists to democratize access to knowledge, capital, and markets for female founders on the continent, with the view of that being some of the leading bottlenecks that they run into in terms of why they don't build and scale startups. And so, yeah, really excited to be here, and that's me.
So, Amra, would you please introduce yourself as well?
Yeah, sure. So thank you very much for having me here, to the whole team. So I'm actually tuning in from Singapore. I think we're doing a whole world tour here. So my name is Amra. I'm the co-founder of Accelerating Asia. Accelerating Asia has three parts to what we do. So the first part, which I think we're most well known for, is our actual accelerator. So it's a pre-Series A accelerator program, which we run twice a year. We look for startups that have traction of some sort already. They're solving an important problem. They typically have all of the tech, or most of the tech ready, a full team, and they're kind of looking for the next thing to kind of bridge the gap to get to their Series A. So we recruit from around the region. We're based in Singapore, I mentioned, but we focus on Southeast Asia, and we go out as far as Pakistan and Bangladesh and down to Australia. So it's quite a big range that we look at here. The second part to what we do is we have Accelerating Asia Ventures. So this is an early stage venture fund that invests in the startups that we work with through the Accelerator Program. And then the final part to what we do is we have a consulting arm, which works with multinationals, governments, universities, and nonprofits on how they engage with the startup ecosystem, but then also the startups that we work with around the region. So lots of different things that we're doing here. And I think I mentioned earlier, it's been a massive couple of years for us. We're about to celebrate our 2-year birthday this coming week. So very exciting and busy time. Yeah.
Yeah. So now the mic turns to Fivan, and Fivan, please introduce yourself. And additionally, because the next question will also start from you, so please also tell us a little bit more about your stories on how you and why you are actually started your venture, and also how you became so successful as battling between your personal drive as well as making something good happening on Earth.
Thank you, Catherine. Hi, everyone. My name is Fivan, and I wear different hats. But for today's session, I chair Vietnam Business Angel Network, which is a network of business investors, angel investors in Vietnam. It was established 3 years ago, and we have about 75 members. And we invest into not only startups in Vietnam, but also across the region in the ASEAN. We're part of the ASEAN Angel Alliance Network, which has about 4,000 members. We also have a syndicated fund within the network to only invest into impact startups. At the moment, the average portfolio number of our member would be from 5 to 6 startups per member. But I myself, my portfolio is about 20, so pretty busy at the moment. Why do I invest into impact startups? I work a lot with the UN and UNICEF, not only in Vietnam, but also across Southeast Asia, and advise and also engage into a lot of sustainability projects. And I believe that as entrepreneurs, if we're not helping the people and the planet, then obviously the 3P of a company is not there. The 3P we're talking about would be profit, but also people and planet. So to me, a balanced company and a scalable company is somebody who would do good for not only themselves, but also for the people, the community, and the planet as a whole. So that's why I've been so passionate about it. And when we established Vietnam Business Angel Network, all of our members are actually engaging into various sustainability projects and activities across Southeast Asia. In Vietnam, we focus very much on alternative materials. So because we're an agricultural country, we have a lot of natural material that we could use for packaging instead of plastic. You can have bamboo, you can have lotus leaf, you can have coconut leaf, a lot of alternative material very much ready within the country. So a lot of our startups are in that particular area. Some in the energy, green energy sector, and also in green tourism. So those are the sectors that are quite popular in Vietnam at the moment, and quite a few of our portfolio are within that particular sector.
Thank you, Fivan. I always believe that a good and truthful intention is really the primarily but very important stage for any of the company to survive and become successful. And in fact, that I personally also feel the same, that starting up a company isn't easy, and then adding up all the 3Ps that Fivan you have mentioned is also a very big task to achieve. So let's now turn back to Amra, and then Amra, could you please tell us more about in your location as well as how you are actually making your business successful?
Yeah, so I guess the background to Accelerating Asia is that I've always been hopping back and forth between the for-profit and non-profit world, just not really happy with either model, and not really finding anything that was kind of satisfying to be working on. So I came to Singapore about 7 years ago to work with UN Women, and I was lucky enough to work on their global social entrepreneurship program. And doing that, I got to meet a lot of entrepreneurs all around the world, all solving really important problems. And kind of what I realized was most of them were coming to us looking for funding for tech solutions. So that was the first thing. And then the second thing was most of the entrepreneurs had a deep understanding of the social issue that they were solving, but not necessarily the business acumen to make it sustainable or scalable. And so that's kind of how I shifted more into the startup world, because I was thinking, you know, there's so many people out here building stuff. Maybe we could combine the two worlds together and create something awesome. So I ended up joining the Murudi team in Singapore. It was a pretty good accelerator program here, and that's actually where I met my co-founder Craig. So he was the entrepreneur in residence there. Murudi was backed by Telstra, and it ended up being closed down a couple of years ago. And it opened up this opportunity here in the ecosystem for something to take its place because of the stage that it was focusing on, but also the specific support that it provided to startups in the ecosystem. So we had a lot of feedback from investors in the region saying, you can't let this thing die. Like, what are you guys going to do about it? And that's essentially how Accelerating Asia was born. But from my learnings at UN Women, I kind of realized that we shouldn't be going market first, you know, kind of saying that we're an impact accelerator or an impact fund. And part of the reason for that is because we wanted to attract people who didn't necessarily know about the whole impact ecosystem. Like, they're solving a problem because it's a problem that they were, you know, passionate about solving. They didn't have to know about the whole social impact space, impact investing, all like those fancy words, which I'm sure we're all very familiar with. The other thing that I realized is that by nature of where we are in the world, in Southeast Asia, there's a lot of problems to be solving. And so with the businesses, they are often solving a social problem without even realizing it and creating impact in that way. So at Accelerating Asia, we focus on investing in what we call just fundamentally good businesses. And the first thing that we look at is do no harm. And I think there's a lot of people who look at, okay, how do we do good? But then, you know, kind of not thinking about how are we limiting the harm that we're creating in the world. So that's kind of the first principle. Now, actually, just because of this approach, we've been able to increase our portfolio. So 70% of them are actually directly tied to an SDG. And I'd say more than half of this 70% would have never even known what the SDGs were if we weren't there talking to them about it. We've got about 42% female founders in our portfolio, which I'm also just personally excited about. It's completely smashing those stats out of the water, I think, for many venture funds and accelerators. So yeah, that's kind of how we approach it. We're coming from just a ground up perspective. We look at social impact, but it's not something that we go like full on in people's faces with about.
Amra, you're actually touching a very important and basic concept that a lot of people has been keep on forgetting about, which is really the theory of change. Because in impact investing, we always talk about what is the intention and what is your theory of change. And theory of change is actually means that, you know, I want to saying that I want to change the world is not really the end of the sentence. You have to tell me how you are going to change the world into different steps. Mm-hmm. And that's where we can actually bring out all of our supports from investors, from the platform, from the accelerators to the startup companies. And so, So really appreciate your advice here, actually, because this is something quite important. So right now, Lwazi, could you please also tell us more about your work and also in terms of South Africa and how you are actually making it so successful?
Yeah. I mean, you know, great question. And I think, you know, Amra has hit and Fivan have hit, you know, really, you know, specific points on that, in that I think that the you know, running theme across both all our responses and I think all our organizations, right, is this notion of sort of human-centered design and human-centered approach to sort of problem solving, right? Which is, in the past, you've seen, you know, in traditional venture capital or you know, traditional instruments where it's more product centered, right? And, you know, you talk about finance specifically, finance is, is, I would say, one of those industries that is still lagging in terms of, how it's designed. Finance is still very product centered and says, hey, you want a loan, this is what you need to tick a box, and this is the only time you can access it. Whereas instead of that, the question needs to become, what exactly is the intrinsics to the problem? What is the sort of indigenous way of how people are processing that problem, and how can you design a solution set for that? So I think in adding to some of the points already shared, the work we do at Founders Factory and the work I do at HQ, I think really focuses on that as well. So as shared, we are a venture development company, and we use those words quite specifically in that, rather than saying an incubator or an accelerator, which I think are, fair terms as well. But I think in this part of the world, for example, we've had a lot of not so great experiences with accelerator models and people, taking advantage of founders and, cannibalizing cap tables. And so it just doesn't have the strongest connotation. But to give a sense of what we do, I think similar to both ladies, the thing we understood about Africa, and I'm African, right? Grew up here, born and raised, spent about 10 years in the US and in the UK, and sort of had a good sense of, different markets and how that runs. The African narrative has always been one of poverty and aid and having a sense of people sitting and waiting to be helped. When you're from here, you realize there's so much opportunity, so much talent, so many strong founders, and really the thing that's missing is the power of opportunity, right? It's this ecosystem, and it's this tool set for founders to be able to actually build businesses that attract capital. So I'd say for me, that's the first thing we came in to solve as a team, is to say, when you look at, historically in 2018, for example, when you look at venture capital across the world, Africa was at about 583 million capital raised across about 128 deals. You compare that to the US in the same year, which was about 70 or 80 billion in the same year versus 500 million. So when you think about that, you ask yourself, what is driving a lot of that? A lot of people assume it's American or European, European founders are somewhat stronger, smarter. I've met incredible people on both sides of that continent, but, equally as bullish about African founders. And when we actually unpack the problem, the issue we found was not that, either region has stronger founders just intrinsically. They have really different sort of ecosystems and support structures in place that are actually helping to build out that ecosystem, right? In Africa, the opportunity cost of starting a business is still so high, and so failure is still such an expensive thing to do. And, Fivan mentioned syndicated funds, and in the US, you'll have that where it sort of creates this security net, right, for founders to come in. And so we understood that very much coming in. And so part of how we're structured is, as a venture development company, we leverage corporate assets and investments for capital because we believe it's one catalyst, but it's not the most important catalyst. And we then, marry that with a Makers Lab environment where our team, which is about 40 specialists across design, engineering, data science, everything a startup typically needs but can't afford. We have a Makers Lab where we then actually co-build with the businesses to absolutely help them in sort of building product that then we know we can go out to market and attract capital for. So we really balance and hedge that investment through co-build and building that ecosystem so that we're able to actually help them move down that value chain from seed to pre-series A, et cetera. And so similar to Amra, we focus at that seed to pre-series A stage as well. And then as shared, we also build startups from the ground up.
Thank you, Lwazi. I think one of the important points that you touched on is really quite interesting because you actually found out the pain point of all the pain points in Africa and gradually starts to build up the solutions for all these pain points by creating such a platform to solve the single pain point out of all the whole, as a general, the whole pain points, isn't it? Yeah. So without further ado, let's continue our question into the next one. I think it's really an interesting question at this interesting time because right now there are quite a lot of things going on around the world, and the current market is really being ups and downs, into a lot of turmoils on the supply chain and on the other sides as well. So right now, people are actually talking about the only end change is the change. And how are we going to navigate inside the change? And I'm sure that each one of us has already been fine-tuning our operational process, fine-tuning our strategies, and so on. So we would like to hear more about how you have done so far, and then how you actually overcome the particular challenges that you have had faced since the beginning of this year. So we'll now go from Amra, from Lwazi and to Amra, and then to Vivan.
Great. So is this around, just how have we navigated the challenges and the changes with COVID, correct?
Yes.
I mean, man, I think anyone who can come on and say they've figured it all out and, are winning, hats off to them. But equally, I would take that response with a huge grain of salt. I think, like everyone else, we are, listening to what the market is saying. And I think equally, really trying to remain agile in terms of what's happened. I think so for where we sat, for example, some of the biggest challenges, coming in from our fund perspective in our program was, in Africa, we've seen stats that say almost 80% of startups that are less than 2 years old are not going to make it past COVID. And so the reality hits really quickly when you hear those kind of startling numbers. And then you sort of juxtapose that to, almost 60% of our economy depending on SMEs and startups to actually drive the next wave of growth. And so you run into a really, unique set of problems and conundrums around, okay, so how do you actually navigate this environment? So I think similar to everyone else, we sort of spent a few amount of weeks really going back to the drawing board, right? Listening to research, figuring out what type of business models survive this, building hypotheses and scenario planning around, what the world becomes and what the new normal is. And so I think we did a really specific piece of work to make sure we were still focusing on the right sort of problem, right, that we needed to solve for, and really making sure that as a team, we're really, remaining lean, remaining focused, and really focusing on the most important things to solve for, which is one, making sure that we stay in market, and then two, trying to do as much as we can to reinvest into our portfolio, help them with runway issues, and making sure that they stay alive. I think the second thing that I think we were actually most fortunate about is, as a model, we really have a very agile model to how we work, and also the culture of what we've built into startups, and a really mobile team, right? So we're headquartered in South Africa, but we have locations across Lagos, London. We've got a team in New York. We've got Paris. We were actually going into India at the end of this year, and then COVID happened. And so one of the things that we've been really fortunate about when I look at, the rest of what's going on the continent is that we've been able to sort of really iterate and build as we learn, right? And really sticking to that human-centered approach to everything, and listening to what the data is saying, and really building and working towards that. And then really the third, focusing on our people, right? I think at this point in time, the other thing has been this, we call ourselves, it's very corny, like Founders Factory Family, but we really are. I think for the type of work you do, it's got to be hard work. It's got to be work that we all believe in. These founders go through a lot of things. So really focusing on the family, making sure that, self-care, people are taking care of themselves, and really making sure that we're staying and over communicating as a team now to make sure everybody stays healthy and sane and grateful to be alive. I think for us, we're expecting to see the peak hit, especially in South Africa, over the next 2 months, and have a health system that is obviously not very well prepared for the level of volumes. And so we were really working together with our corporate investors, who are two of the biggest actually investors that shore up the economy, which is another, blow to us, where we've got the leading hospital group where the country's actually depending on, and one of the largest banks, which a lot of the, economy is underwritten by. And so really, I think like everybody else, trying to stay positive, focused, and really invest in people and make sure we're checking in and staying focused on the right problems.
Thank you, Lwazi. So, Amra, what about you?
Yeah, I mean, I wouldn't say it's been easy over the past couple of months, that's for sure. We've definitely all been tested in ways that we didn't expect, or some maybe that we expected, but most I think that we didn't expect. So we actually got impacted in quite a few ways. I think I mentioned that we're independent, or if I haven't, we're independent. So we've got two parts which were kind of, I would talk about, that are probably the most impacted. So the first was obviously the startup. We kind of already, we saw COVID coming. We kind of already had an idea that, the consulting side of our business would slow down because, everybody's going to be pulling back their innovation budgets as soon as something like this happens, which is so ironic because that's the kind of time where you should be looking at innovation and, looking at how you can solve some of these problems. So we knew that that would be the case. And we actually redirected our efforts to just supporting our current portfolio. That was kind of the first thing, and overcoming a lot of challenges that they were going through because they're all based everywhere around the region. And many of them, Southeast Asia is quite small. So you hop on a plane to go meet an investor, you hop on a plane to go do that. I can't believe how much travel I'm not doing right now, which is also a little bit strange. We had to deal with founders getting stuck in countries as they were getting locked down. We had to deal with founders' visas expiring as countries were getting locked down. So I think the first couple of months were just crisis, pulling on all the contacts that we had around the region to try and get our founders home to, be safe. And then after that was, okay, how can we support them with the changes that they're going to have to make in the short term in their business models, and future-proof them for the next couple of months at the very least, or help them close some bridge rounds so that they can make it through. I think one thing that we didn't count on, which actually was quite incredible, is there's something that we call the cohort effect, which is because all of the startups come from all over the region and they're all different business models, they don't compete with each other, which means that there's this kind of trust that they build within the cohort. They become really, really close friends. They often do business together. They co-pitch for funds. They share networks with each other. And this kind of bond actually turned out quite incredible for COVID because we had startups in the portfolio that obviously weren't doing too well because of the nature of their business. But we had some startups doing really well, and they were sharing business opportunities with each other or contracting out teams so they wouldn't have to let them go. And so overall, as a portfolio, we kind of saw everyone do okay, which is something that we knew was there, but I don't think we really realized the power of like creating a strong community that trust each other and that are okay with being like, I need help, and then people coming and actually trying to figure out how to help them. So I think that was with the current portfolio. At the same time, we were recruiting for our next cohort. And so that kind of put a spanner in the works for us because typically we would travel, physically go out, meet, usually meet a couple of thousand startups each recruitment period. And so we couldn't physically get to any of these places. So everything was run virtually. Actually, I think it really went quite well running it virtually. I'm kind of impressed that we don't maybe in the future need to do as much travel as we have been doing as a team. So that has been interesting. We've also seen a change in the type of companies that have been applying to us. A lot more ed tech, a lot more med tech, clean energy companies. Most of the portfolio had already identified an SDG that they were working towards. And so that was a very interesting shift. And I think that was because a lot of these kind of issues were being raised during this time, so there was a lot more awareness about it. So yeah, that's kind of what we've been working on. I think one thing that is going to be a challenge moving forward for us is because we are regional, countries are going to be opening up in different times. And so for the foreseeable future, we will not be able to have a full program in person how we have done in the past. There will always be someone who is not going to be able to come to Singapore. And so what that means for them raising investments is a big question, because many of them come to Singapore to establish a headquarters here and to raise that next level of investment because all the institutions are here. And then the second thing which I mentioned about the cohort effect is, in a virtual format, how do we create trust? How do we create that bond that they had when they were physically with each other? You know, you're sitting next to someone, you can see they're in a bad mood, and you can address that then. It's difficult to do that in a virtual format. So yeah, that's some of the things we're currently working on at the moment.
Thank you, Amra. And Pivan, please share more about your operations to us.
So I second everyone that it's been very tough for all of us. But fortunately, Vietnam has been one of the luckiest countries during COVID. We had only about 200 cases and all under control. So we opened up the market early May. And right now, if I look out into the city right now from my window, everything's back to normal. So very, very lucky for that. However, we had about 3 months that we had lockdown and, limited operations and stuff like that. What I can see very interesting is that as an investor, normally I would check in with my startups every 2 weeks or maybe every 3 or 4 weeks. But during COVID, we check in with each other every hour because we have to, on a group chat on Messenger, we would have to say, okay, what we need to do? Let's pilot this, let's pilot that, let's experiment this, let's make this happen, see how we can stay alive. Of course, the number one purpose is to stay alive first and not to, go away and, go out of cash. And the number one no for a startup is running out of cash. So we have to create cash, right? So a lot of the startups have to immediately change to, if they are operating on a marketplace or they're operating on a physical distribution model or whatever, everybody has to now change into online and change to in-home. So we do a lot of in-home delivery services and products during COVID. And amazingly, from idea to reality, it's basically about 2 hours or 3 hours. So that kind of speed that you're now working on to make something happen, I'm so amazed. And I think that should be how we work moving forward, basically. Secondly, I think after staying alive, I think the second thing that we've learned is to find opportunities in the tough situation. So as I said before, because we have to create cash, we have to think of various ways of distributing the products and the services to the customers. Therefore, we now realize that, there are a lot of avenues that we haven't even thought of, or there are, areas of revenue generation that could be the future generation of our revenue streams. So after COVID, basically, the teams are all working with each other to revisit our business models. And to be very honest, 2 of my startup teams have changed the business models completely and pivoting in a different way. So I think as bad as COVID is, it's got its benefits. Especially for our startups to learn how to be more agile. I like that word from Lwazi. They learn to be faster. They learn to be more persistent. So I just need to make it happen. Otherwise, I'm going to be going away the next day. and very down to earth, not so dreamy about, all the millions of dollars that are pouring in from the investors, but to stand on your feet and to know how to make money and to know how to survive, with whatever resources that you have at that particular stage. So there are a lot of lessons that we've learned, and I think that's fantastic. It's positive. Moving forward right now, because we can't travel, so we also work with other ecosystem builders through virtual market access. So we create sessions like these where we talk with specialists and ecosystem builders, or also mentors from countries that we would like our startups to move into next. So just to prepare themselves for, all the market information, market data, and also strategy, and wait for COVID to go away. And then straight away, we can actually start moving. So those are some of the learnings that I've learned during COVID. And I guess all startups as well as all investors have learned a lot through this particular time. And I guess moving forward, the world is very different and the business models can be very different.
Thank you very much, Vivian. Actually, I'd like to share one of the things that I find out that is in this difficult time is really, as you said, we try to find the best strategy or even the positive side of it during any difficult situation. And this is really what impact investing is all about. We find the pain points and we find the things that are actually in a not a very good time or around the bottom of the J curve, and then we try to find the benefits of it and then turn it to the positive side of it and let it shine. So COVID really is helping us to find the true intention and the good ones within business models and how people are actually trying to survive and people are actually trying harder. And so I'd like to make a summary point here, a small summary point here, is really that COVID is not stopping us from loving each other and from progressing with each other. Similar to our business in Hong Kong, we are actually progressing quite a lot during the COVID time. We actually just we just actually became the 100th open, so operational principle of impact management under the IFC, so the 100th one. So we are actually celebrating, like around the world, there are already 100 of the asset owners are actually trying to input their management system into impact investing. And I'd like to now turn into the future conversation about what about the future? Are we keep on talking about all these amazing things and then sharing our experiences together, and how the audience will be able to keep in touch with all of us? So please share your ways of keeping in touch. Lwazi, could you please start?
Sure. I think like everybody else, I'm actually super excited about what COVID has sort of accelerated in the world to some extent. I mean, obviously say that very sensitively in the sense that people have lost lives and, there's been a lot that has happened that is obviously adverse. But, as an impact investor and someone that I'm really passionate about the thought of impact and finance, financial returns not necessarily being mutually exclusive. Prior to this moment, the theory was to be an impact, to do the right thing means, there's a trade-off between returns, and if you want to do the right thing, you got to be poor. And, it was always this narrative around it's more of a do-good thing and not necessarily something with commercial return. And so for me, I'm really excited about some of what this is catalyzing, that you're seeing money now go to people who are building businesses that the world needs, right? And I think that are solving really important problems. I think, when you look at venture capital, it was starting to take a really weird, skewed approach around hundreds of millions and these crazy billion-dollar valuations that just were making no fundamental sense. And so I think for me, one of the things that I'm really excited about is seeing the right entrepreneurs and founders who deserve capital starting to be attractive. I think to your point, Catherine, to see so much investment move that way is, I think unprecedented, when you look at the size of impact investing versus the trillions of millions that go through traditional capital structures. So I think that's one area that I just wanted to sort of, talk to in terms of the future. But in terms of, ways that we're keeping in touch and how to keep in touch, I think for me, email, Twitter, there's been a lot of Zooms. I say death by Zoom. It's turned into, I used to love, and I still do, I love the notion of keeping in touch with people, but I think we've actually now had to, build in different types of behavior even into our team calendars, right? We'll literally schedule lunchtime and we'll schedule no calls or like no meeting Wednesdays, just because I think a lot of us were turning into 7 a.m. Zooms to like 10 p.m., especially on our end, because we're managing so many time zones. So I think communication, I think, has gone through this curve of accelerated communication, but I think now we're starting to see a lot of people sort of find cadence and find the right sort of rhythm in terms of what's the most optimal. So specifically for me, emails, WhatsApp, the chats, I think have been continued. But I think also as for us as sort of lockdown has been lifted, I'm finding myself super grateful for just, going to sit in the grass and like, just look at a bird, things I would have taken for granted, and seeing family and really, taking stock of relationships, I think for me has become really important as well.
Thank you, Lwazi. And what about Amra? How are we going to keep in touch with you?
Yeah, I mean, I love that point that Lwazi made, because I'm always telling people that we have such an opportunity with the investments that we make. I mean, I see venture capital and angel investing and just this whole ecosystem that we get to shape what the future could look like. And that's ultimately what venture capital is all about, is making a bet, right? You're making a bet on what you think the future is going to look like. And so by investing in fundamentally good businesses, we can shape that. We have an opportunity to shape that. So for us at Accelerating Asia, we've got a couple of ways that people can engage with us. I mean, we touch on so many different parts of the ecosystem. I think the first is, if you want to engage with startups in the Southeast Asian ecosystem or invest alongside us, feel free to reach out. We're always excited to work with different types of partners. And I guess the other thing is for startups, so we are just about to announce our next cohort, but the waitlist is open for the next recruitment round, which comes around so quickly. I don't know how these things happen so quickly, but the waitlist is already open, and we'll start pretty much recruitment as soon as we've announced this next one. So it's a very short wait. And I think in terms of, connecting with me or anyone on our team as well, we're a very small team. We always check stuff that comes through the website. Like, there's a real person on the other end of that form that you're filling in, and I can see everything that's coming through. So, website is probably the easiest way. And then the second one is LinkedIn. I'm always on LinkedIn, very happy to connect with people on LinkedIn. But yeah, so those are kind of the two main ways that I'm reaching out and connecting with people these days.
Thank you, Amra. I'll send you an email as well.
Yes.
So, Ivan, what about you? How can we keep in touch with you?
I think the pandemic has taught us a lesson that, no matter how much money we have and how many companies we have, it's always down to whether you are safe, you are healthy, you're happy with, your loved ones around you, you're happy and having the community around you, and you're still alive on earth. So very, very fundamental. So I think, the future to me is that. The future is how we can work with each other so that we're all safe, we're all healthy, we're all happy, and the world is a happy place. So you can contact me probably best on LinkedIn, and we'll take it from there. Just search for my name on LinkedIn, you'll find me.
Thank you, Vivan. And for AvantFaire and me as well, we are both in touch on LinkedIn, on our company's email, as well as Instagram. Well, we're constantly publishing articles about impact investing as well. So there are multiple ways that we can definitely keep in touch with each other and between all of the speakers as well, because I feel that this is such a nice and rare opportunity that people are from different continents and we are actually sharing the same dream as well as sharing different thoughts about different inspirations. So I would really want to keep this up and to keep the conversation going with all of you in the future. And thank you very much for joining me for this slot of speakers event.
I think, Joe, you're on mute, I think.
How can I do that after I've been doing it all day? Welcome back, Catherine, Lwazi, and Amra. Thank you very much for your very interesting sharing again. Let me start kick off the Q&A section. Shall we kick off this one first from our good friend Cynthia? She has a question to all the panelists. Would love to get your thoughts on, is now a good time to start a business? Maybe we start with alphabetical orders, Amra, and then Catherine, and then Lwazi.
Sure. Hi, Cynthia. So, I mean, you know what? Now's as good a time as any to start a business. I've heard it a couple of times, so this is probably not going to be anything new that anyone's heard, but never waste a good pandemic is what some people have been saying to start a business. But in all seriousness, I think especially a lot of attention has been drawn upon the types of businesses that are currently being funded, and I guess the opportunities that this is creating. You know, at Accelerating Asia, I think I mentioned we just closed recruitment for our most recent cohort, and we had an overwhelming amount of applications that came in industries that we hadn't typically seen before. And so I think now is as good as an opportunity as any to get your idea in front of people. This is the time that people are actively looking for new solutions. I think people have realized that things weren't working as they were before, and it's time to change. So now I think is the best time. If you've got an idea, now is the best time to go for it.
Can't agree more. Time to change. What about you, Catherine?
I would really love everyone to go back into their concept, to ask themselves about why is it that I'm actually starting up my business, and what is my value proposition, and why I want to get out of there right now, or if not, when is the best time? So I would say it's really a personal question about when it is the best time to start up your own company. But it's never going to be late and it's never going to be early. So it's really a question about how ready are you and how ready is your team, and also how ready is your business model to the current stage of the market.
Thank you. And Lwazi?
Yeah, I mean, I think I'd echo what Amra and Catherine have said. I think for me, it's always a great time to start a business, right? And I think when we look at some of the unicorns we live with today, your Airbnbs, your Ubers, those were all started in sort of, the height of recession, or 2008, 2009 recession. So I think the premise stays the same, right? You've got to make sure you're solving the right problem, find a sustainable problem to solve, build around that. I think there's something to be said around that. It might be slightly harder now to raise capital than in other times, in terms of we're sort of seeing this shift towards an investor buying, an investor market, versus where I think we've come from, where it was more of a founder market. And you saw that with all the crazy valuations and competition in terms of pricing. But yeah, I think it's a great time to start a business. I think you just got to focus a lot more on your why, your business model, to Catherine's point. And I think there's money out there. You've just got to be in the right sector.
Sure, without entrepreneurship, who is going to be on the battleground to solve some problem, right? Okay, next one from Dave. Impact-driven startup already facing fundraising challenges during normal time. Do you guys, or do you ladies, think it will be more challenging in the current situation. Let's start with Lwazi this time, and then Catherine, and then Amra.
Great. Yeah, I mean, first of all, I think as an entrepreneur, any founder will tell you, you know, fundraising is one of the hardest and most just excruciating processes out there. And so I think fundraising as a whole is always hard. So I think there's also a location and geographical lens to apply. Unfortunately, I don't know where the question in terms of the region the person's in, but again, I think it always stems around the value proposition and the problem you're solving, the market you're solving for, and more importantly, sort of the defensibility around that. I think what we found for sure is money always finds really good investable opportunities. And so I think as founders, focus on really building a strong value proposition for whatever market you're in. Make sure you're building in defensibility, leverage your network, and, you know, in theory, and when I say network again, you know, there's accelerators, there's early parts of this ecosystem that can drive you forward. But yeah, it's resilience. Being a founder is one of the hardest and loneliest jobs in the world. So keep the fight on.
Thank you. Please go ahead, Catherine.
So I really turned the question into another question, which is, do you actually believe in your own business? Because, I mean, asking for fundraising has always been hard for any time in any situation. But I really want to echo about what Amra has said during the main session of our panel, that it's really about it's really about this time that we are actually seeing a lot more valuable investments and companies that's coming out of the market. And as a fund manager myself, I would actually feel that this is the best time to find real good investments, because actually the market is helping us to testify, are the business are going to be sustainable? Are the business is actually having a very good corporate governance structure as well as their ESG measures? And are they actually solving a social pain point, or it's just a random point that they're actually making during the normal time? Because this is certainly a very abnormal time. So I would say it's actually, the market is actually helping us. If you are truly a very valuable investment and a really valuable company, then go out there and there are more money for you.
Great. And Amra?
Yeah, I mean, I think I would echo what Lwazi and Catherine has said. I don't know if I can add too much on that. I mean, what we've seen is there are a lot more impact startups coming our way. And I have a feeling it is because of the current situation where they're probably getting tapped on a little bit more. People are actively looking for these kind of solutions. I mean, you know, just I think yesterday or the day before, so I also look after Southeast Asia for Shaper Impact Capital, which is connecting impact investors and impact startups. And we did a whole COVID newsletter just on startups that are addressing the SDGs, that are working on, you know, in this area. And I don't know if we would have done that before, you know. So we're actively profiling, the investors are actively reaching out for these kind of deals. And so I think now is as good as time as any for impact-driven startups to be, you know, really putting themselves forward and showing that they're doing more than just making money. They're actually making a difference on the world, which is something that people are actively looking for. But yeah, I mean, fundraising is hard. It's going to be hard either way. I guess at least with impact startups, they've got an additional value proposition, and then they are creating impact as well as being a viable business at the same time.
Yeah.
Thank you. Yeah, fundraising is hard, guys.
I think actually one point to add to that, Joe, I think one of the other things we always tell founders as well is around this notion of, obviously, revenue is the best capital you'll ever raise, right? So even if you're not able to raise money now, focus, to Catherine's point, on the business, show that, you know, because revenue says somebody believes in it, somebody's willing to pay for it. And so I'd say that that's another thought.
And I think the trigger point is that like we often say that now is always the time for change. When there is change, there is opportunity, guys. So watch out for that. Yeah, stay tight, I would say. Okay, coming to the end of the conversation, let's do one last question here. Any model of enterprise risk management in your business plan? Starting from Amra?
In our business plan.
Yeah.
Okay.
Something deeper in 7 o'clock.
Yeah. I mean, is this looking at it from a governance perspective? Is that where this question is going?
Yeah. Think about like on your really on your business model, how do you manage your own risk as well? Like so.
Yeah. So I mean, I think we see that in a couple of ways. Like one, for Accelerating Asia, we have a diversified portfolio, right? That's I think one of the biggest risk management things that we can have in our business, because we are investing at an early stage, right? They're very early stage. There's a lot of things that could happen, let alone they've got to deal with a pandemic at the same time. So there's a lot of things that can happen. And I think I mentioned this in the main session where, you know, overall, we've seen the portfolio has done okay because it is a diversified portfolio. We've also seen some really interesting things happen. So for example, we have a startup that is in the hospitality space, and you would kind of, or hotel space, you kind of expect that, you know, they probably experience a slowdown during this period of time. But essentially what they do is they help hotels digitize, and they ended up seeing a surge in their new clients coming on board from a lot of new different markets. And the reason was hotels are kind of looking at it saying, well, now's as good a time as any to digitize, right? We don't have any people staying in our hotels. Now's time to upgrade all the systems. So I think our diverse portfolio is probably one of the biggest de-riskers. The second thing is we invest not just only one country, but across the region as well. So that's another way of diversifying the portfolio. And the final thing that I would talk about is the actual Accelerator Program itself. The Accelerator is designed to de-risk our investments. So we work with the startup very, very closely on as much as possible as you can in the early stage, right? Things to kind of strengthen their businesses and make sure that they're ready for that next level of either investment or growth. And they receive ongoing support from us. So, you know, when things happen, we're oftentimes the first phone call, the first message, or first thing that happens, first people they reach out to. So that's, I guess, on the portfolio side of things. On the other side of things, I mean, us as an independent program, we've got multiple revenue streams. So we de-risked ourselves as well when we set up this entire business. We took a bit of our own medicine when we were setting up this program.
Cool. Great. So actually the time is going to be up, but please, may I ask Catherine and Lwazi to wrap up in one sentence, any further tips that you want to give to the entrepreneur?
I'd like to actually just, rather than giving tips, but maybe answering the question I previously have. So our business purpose has never been changed. So we serve our investors through helping them to achieve their investment goals as well as their social mission. Well, on the other hand, our operation has never actually been changed or affected neither. It's actually because we have already been adopted as a green company. And also we have paper free, as well as we are having flexible working hours. So when the pandemic actually hit us, it's actually not hitting us because it's just making us as efficient as before. So this would be my final answer, that if you want to actually be more risk managed, or more robust on risk, actually the best way is to look into the future direction of the industry and go ahead of the industry. Well, just setting it up. If you believe that's the right way to manage your employees as well as your company, then just do it.
Great. Lwazi?
Yeah, I think as a tip, I think most of the business model questions have been answered. I think as a tip to founders, it's always hard when I get this question because it's, I'm not an expert in any terms, but I'd say for me, just, one, if you haven't started and you want to explore it, just start, wherever you are, go afraid. Everyone's afraid. Everyone puts on fronts in some cases, but we're all figuring out at the same time. So I think trust yourself, trust what you're building, iterate, keep positive and stay resilient. I think that's the best you can do. And yeah.
Now
Thank
I
you
know
for
the
having me.
keywords. Now I know the keywords for this panel: resilience, agile.
Yeah.
Keep going, guys. Okay.
Yeah, and self-care.
Let us wrap up today. Thank you very much for all the panelists. I know that there's still more questions on the Q&A, but please feel free to reach out our panelists on LinkedIn, on their website. They're very happy to answer all of your questions. Thank you.
Yes,
Stay
thank
safe.
you.
Thank you very
Thank
much.
you for having us.
Thank you.
Thank you. Thank you. Thank you. Thank you.
Thank you.
Bye.
Bye.
Bye bye, everyone.